a business partner in many ways. Paul Bonney from Grail Research, Mark Sperling from T3 Capital.
T3 Live.
T3 Live. All right, guys, let's talk about these markets. Let's talk about the economy. Paul, you and I, while I was out with Lyme disease, we were trying to figure out the no-brainer trade.
Yep.
And the no-brainer trade that we came up with is?
Short bonds.
Short bonds. In other words, you figure rates have to go higher over the next year or so.
That's right.
What are we looking at and why?
Yeah, a couple background things. So one of the longest, strongest trends in the market basically ever is the decline in interest rates going back all the way to 1982 when 10 and 30-year treasuries were 15, 16%. Now they're trading at 4.5%. And so there's been just a long-term trend.
From the 50s into the 70s, it was a climb. From the 70s to today, it's been a decline.
Yeah, the 70s, we had this massive period of inflation and stagflation, and we raised interest rates to get out of that.
So
Does that sound familiar?
Why, after 30 years, are you expecting the trend to reverse?
Yeah, well, it's a couple things. So short-term rates are controlled by the government, the overnight rates. If you listen to what's coming out of the Fed now, there's not a lot of room to cut rates anymore, right? The next step is, they may wait, but the next step's probably a raise. So that's short-term rates, but what's more interesting is the long-term rates, which are controlled by the market, and that's supply and demand. And so,
Mark, let me get you in on that. So, I mean, do we make any sense at all looking at nothing but higher rates over the next 2 years? How can inflation and treasuries not go up? The rate on treasuries not go up?
I do think you're going to get higher rates and higher inflation, but the fact is, it's all about the trade at this point in time. I said it was last time I was on here. Right now, financials is where you have to look. That is controlling the market, and it's a matter of what happens with them. There goes the market.
But see, the problem with the financials here, you got a binary outcome. I mean, they either are all collapsing and going to zero because the balance sheets really are completely insolvent because of those balance sheets, or they're going to rock because things are going to be okay.
You could have made 100% in half the financials in the last 2 weeks.
Yeah.
Now, the fact is,
and how many people at home should be trying to make 100% in 2 weeks on the financials in the middle of a falling market?
Well, it's the fact that the technicals tell you what's going on. Right now, that we have a 50% retracement in the financials. Now, after today's action, a little bit different call. We could actually test our lows again, or we could retrace back to a basing level where actually we should see some resilience.
You're talking a time frame that I assume is much more short term than what Paul and I are talking about in, say, the next year or two. You think over the next year or two the financials are actually a good trade one way or the other?
I think over the next year or two the financials are a good trade on the long time.
How about you, Paul? The financials going to get out of this okay?
I think we've got a lot more down before we see up.
You're long the XLF, you told me.
I did. So that was a trade.
Why are you long the XLF, an index for the financials?
Yeah. Well, there was a big bounce here, and I guess one of the things that I was looking for was some excitement about the recent housing bill that could put a bottom on mortgages, or at least temporarily. So,
well, it did get reflected in the stocks. Did you sell in today's downdraft?
A little bit, actually. But what drove the stocks, and now we're talking very short term, but the SEC came in and created a new rule about short selling.
I do agree with that,
and
yes.
I think what we had is a lot of people who had these naked shorts. They basically just had to rectify their situation.
Which, they didn't even need the new law. It was a law in place already. You're not allowed to short sell things without locating the stock.
But if you
Paul, when you ran a hedge fund, could you, even if you wanted to, short sell naked?
No, absolutely not. So the first thing you have to do when you short sell is you have to call your
broker.
You have to call your broker.
Not naked like that. The Real Housewives of New York are getting an entirely different idea on this. Paul, in 30 seconds, what is the bottom line here? You're looking for...
So I think the short bond trade, you're not going to lose a lot of money. I think you have 50% upside in kind of a year or two if interest rates start to go up. I think when it happens, it's going to start happening very aggressively.
Paul, you got a walkaway trade here?
Mark,
sorry.
Bottom line is I thought, it was too easy, the bottom 2 weeks ago. I think we're probably going to test it again. And it's just a matter of, we need a capitulation bottom in order for us to be happy.
I got a short-term trade by the Real Housewives of New York. They'll be on with us in just a second, guys. We got a whole lot more happy hour on tap. They like the trading naked idea. I'll tell you that right now.
We're second.
Hey,